Hot off the press, the Secure Act, setting every community up for retirement enhancement. Just passed. Most of the provisions will be effective in 2020. So what the heck are they? Because it's the biggest retirement act we've had in the last decade. The first provision is small businesses can band together under multi-employer plans for creation of their 401ks, which means that there'll be less costs and more likely more firms will be able to offer them, which is great. Number two is required minimum distributions, RMDs. Right now at age 70 and a half, you have to take money out of your IRA or your 401k, whether you want to or not. That will be pushed back to age 72. There's going to be no age restrictions on IRA contributions. So going forward, anyone that has earned income at any age can do an IRA contribution. 401ks will be available for part-time employees. If you work for an employer for 500 hours a year, at least 500 hours, for 3 consecutive years, starting in 2021, you will qualify to be in that plan. Annuity options will be available in the plans, which the insurance companies lobbied for, and they're quite excited about, but just be aware that they are now going to be available. And probably one of the biggest things is the stretch IRA is going away effectively. So a stretch IRA is if you were to inherit an IRA from anyone other than your spouse, you can stretch those distributions out over your lifetime. Well, that's now going to change to 10 years, effective for folks dying in 2020 and later, if you inherit it obviously at that point as well. So what this means is that within a 10-year period, you're going to have to pull all those funds out. You can do it evenly over 10 years. You can wait till year 10 and pull it all out, but by the end of 10 years, you have to get all the money out. There are some exceptions to be aware of. First of all, this doesn't apply if you inherit your spouse's IRA. There's really no changes there. There's actually a whole bunch of other rules, which I won't get into here, but spouses this doesn't apply to. But some other people that will still be able to stretch their IRA over their lifetime is if you're minor, under age 18, if you're disabled or chronically ill, you'll still be able to stretch the IRA. And probably the most important one is if you're close in age to the person that is deceased. In other words, if you're no more than 10 years younger than the IRA owner, you can still stretch it over your lifetime. But virtually for everyone else, they got to pull out the dollars within 10 years. This will make a pretty big difference for a lot of folks that have big IRAs, and let's say they have just 1 or 2 beneficiaries with a large IRA, meaning that that money is going to have to come out within 10 years instead of over the recipient's lifetime. So you may want to start looking into Roth conversions and things like that to lessen the tax burden for your beneficiaries. Anyway, those are the main provisions. There's probably about 25 other ones, but those are the main ones I wanted to give you a head start on so you knew what was coming in 2020 and beyond. If you'd like more information, we have a guide on our website at purefinancial.com.